is Mentor Chris with the ICT Dojo. I'll be going over our new psychology series called The Warrior Mind. In this series, I will be showing you what it takes to be a warrior on and off the charts. This video is based off what kind of expectations we should have on the charts. Quote I liked was, "To be a master of the sword is to be a master of oneself." What this means to me is it's not about how sharp the blade is. It's not about how good the strategy is. It's about how you could tame your psychology and actually use that blade to our advantage. Now, going on to our first section, don't set monetary goals on accounts. We should never set a monetary goal on an account because if we're trying to push for a new goal every week, we're not focused on the actual market conditions. Instead, we're focused on how much we can make. If we're operating out of fear of losing or gaining money, then we're not focused on what made us profitable in the first place. Next, instead, we should set percent targets. Notice the word usage. A target is simply something we aim for, but we don't expect to hit every time. And when we do hit it, we stop. Why are we doing this? Well, if we're able to make 1% every week on a 100K account, then it's possible to make 1% on a 400K account. Nothing changes. From a smaller account to a larger account, the only thing that changes is your size. So once you've proven you can succeed on a smaller account, then nothing's stopping you from trading a larger account and having the same success. Setting a target helps us avoid all emotional aspects of trading, such as FOMO or greed. Our target is built off of a risk factor, not an emotional factor. So, next up is think of money like a tool, not a means to pleasure. Instead of thinking what you can buy with your money, think of how you can protect your downside. Well, how can we do that? By obtaining more capital or by investing our money into long-term assets. Because in the long run, that's going to make our losses insignificant because we're going to be covering those losses with extra capital, extra money gained. Next, going into every day not expecting to take a trade. When I'm doing my pre-market analysis, I'm looking at my potential bias and what's possible for the trading day. Now, the way I stay so calm before a trade or as price is developing is I'm not expecting to take a trade. Because if I'm expecting it, then I'm seeking any reason to take a trade. Instead, I'm going to let the market tell me if I'm correct. I'm going to wait for such a good setup that I can't pass up on it. I already know what to expect from the week using the economic calendar. I've set certain rules that protect me, such as not trading the day before NFP or not trading a no news Monday. I set these rules because I know my edge diminishes on these days. How I avoid FOMO is that I know my profit factor overall is more important over the long run than it is today. I'll give you an example. Say we take a great trade on Wednesday, a 100-point move on NASDAQ. Well, if you're on Wednesday, but you've already taken 3 losses for 70 points because of Monday and Tuesday, then your profitability greatly decreases. Now, 100 points might not sound like a lot, but when you're copy trading across 5 accounts like me, that ends up being up to over $5,000 in profit. When if you were a little more patient, you would have had a much better week. Our final section, using Forex Factory as our roadmap. Again, this goes back to knowing what days you will or won't trade based on data you've journaled, understanding when to be in a trade, when to be looking for a trade, and when to just step away. Using kill zones as our filter. One of the best ways to limit our overall risk and increase our profitability is sticking to one kill zone, because price will typically have the same behavior at this time. It's easier to read price and take less trades. So for me, that would be New York session. That's what I've traded the last 3 to 4 years. And for Mark, that would be Asia and London. And even though we both know how to trade all sessions, our overall strike rate is going to be higher when we just stick to one. Using macros as our execution. So what if we paired all these together? We only trade on certain days and that we know are going to have clean price action. And we use kill zones to trade in repeated market conditions that we're used to. And we use macros to enter on high probability trades. Well, that would mean we would only get a few opportunities per day. And yes, that's a good thing because I see so many traders over trading. By the time they get a win, they only end up being break even on the day. This is how me and Mark make so much profit with so little amount of trades. It's about knowing when to strike. The biggest advantage we have as retail traders over a hedge fund or a prop firm is we don't have to be in a trade every single day. We can pick and choose what conditions are right for us. And now I'm going to leave you guys with that thought. If you liked the video, like and subscribe, and thank you, Warrior Minds.